Hello and welcome back to our mini series on UAE Holding Structures. In our first episode, we explored why the UAE has emerged as one of the world's leading structuring centers and the broad range of holding vehicles available across its financial and non financial free zones. Today, we are focusing on a defining characteristic shared by many of these vehicles: dematerialized or passiveness. I am joined today by Kath Zagatti, lead partner, legacy and family office at MHQ. Kath, thanks for joining.
Thanks for having me, Jenny. This is indeed a great topic because passive structures are often misunderstood, but they are fundamental to how modern and sophisticated asset ownership is organized here in the UAE. So I'm glad to be here with you today to discuss about this.
Perfect. Let us break it down first. When people hear passive or dematerialized holding structure, what should they be thinking?
All right, so a passive holding structure is an entity established primarily to own assets or interest, not to carry any type of commercial activities or commercial operations. So what defines it is not just the legal form of this entity, but the nature of the activity it undertakes, right? So type of assets that can be held through this passive holding is shares in subsidiaries or joint ventures, investment portfolios, properties, loans, receivables, and any other type of structured financial assets.
Okay, so the function is ownership and control, not monetization.
That's exactly it. That's exactly it. So the purpose is to consolidate ownership, centralize governance, and control ring-fence assets and risks, and enable restructuring, succession, or future investment, for instance.
Okay, so why would a jurisdiction choose to offer passive regimes at all?
That's a good question. So, see, they need to cater to the needs of their clients, right? And their clients very often need a light vehicle for simple holding or protecting assets efficiently, separate ownership from operations, manage risks at a structure level, and avoid unnecessary operational costs. So if every holding entity would have to be built like an operating company, this would add a lot of costs, but not a value. Yeah. So passive regimes are therefore designed to be lean and fit for purpose. The UAE has been particularly successful in formalizing this regime, combining both flexibility and regulatory compliance. Sorry, regulatory acceptance.
Okay, so bringing this into the real world, who typically benefits from passive holding structures?
So I'm going to give you a couple of examples. Okay, so first, think of corporate groups. Multiple subsidiaries across jurisdictions can be centralized through one single passive holding entity, simplifying governance and dividend flows as well. Another example that we see on a daily basis in our firm, right? So family offices and private wealth structures, consolidation. Sure. Of family assets, also enabling succession planning, segregation of assets by classes, and avoiding, obviously, cross-contamination between these different classes of assets. A third example, think of investors and joint venture. When multiple parties pool funds together for a particular investment, passive holding, in this case, can create clarity around ownership, decision-making mechanisms, exit strategies, while still remaining operationally neutral, right? Another example here, risk segregation and asset protection strategies. Even single investors or family business often use multiple passive entities to segregate asset classes and avoid these cross-contamination.
Okay, so now this is starting to sound almost too good to be true. If passive structures are this efficient, what are we giving up in return? What is the trade-off?
Well, that's the thing. So the benefit, as I said, is efficiency. But the trade-off is limitation. So Passive holding vehicles are not operational entities. Hence, when clients require provision of service, monetization, capital deployment as business or employees with residency visas, then the structure will typically need to evolve beyond a pure passive regime. That might mean adding an operating company beneath this holding layer, or selecting a legal form that supports substance and active operations.
Okay, so passive structures are not shortcuts. They are deliberate tools built for ownership, control, and long-term structuring. Yeah.
Yeah, that's correct. And I think that this is where the UAE strength really lies. The UAE offers both end of the spectrum, right? So lean passive vehicles for clean ownership and consolidation, and fully substantiated type of companies for clients who require operational presence.
All right. I think that is the perfect spot to leave it for now. In the next episode, we will look closely at the UAE's most used passive holding vehicles, ADGM SPVs, DIFC prescribed companies, RAC ICC IBCs, and DMCC holding and SPV licenses. We will go through them one by one and clarify what they are specifically designed for. Kath, thank you for joining me today.
Thank you.
And thanks
Pleasure.
everyone. Thanks everyone for listening. We will see you in episode 3. Thank you.
Thanks. Bye.